Welcome back to Shrouded Securities, where we digest hundreds of pages of public filings for ETFs and other publicly traded securities to create a personal briefing just for you. I'm your host, Spooky, and today we're buzzing about the VanEck Social Sentiment ETF, known by its ticker symbol BUZZ, offered by VanEck, a well-established ETF provider. BUZZ seeks to track the performance of the 75 large-cap U.S. stocks that exhibit the highest degree of positive investor sentiment and bullish perception based on content aggregated from online sources including social media, news articles, blog posts, and other alternative datasets. In essence, BUZZ aims to ride the wave of retail investor enthusiasm, perhaps inspired by the MemeStock phenomenon that began around the explosion of GameStop in January of 2021. The BUZZ ETF launched in March 2021, leveraging the Next-Gen AI U.S. Sentiment Leaders Index. This index uses artificial intelligence to scan online posts and discussions to identify the stocks generating the most positive sentiment. The index is reconstituted and rebalanced monthly to capture shifting sentiment winds. As of March 31, 2024, BUZZ had approximately $70 million in assets under management. The fund's top holdings include names that often generate online buzz, such as Coinbase, Tesla, Alphabet, SoFi Technologies, and NVIDIA. The fund is heavily weighted in buzzy sectors like information technology, consumer discretionary, communication services, and financials. BUZZ sports a 0.75% expense ratio, which is on the higher end for an index ETF but perhaps justified by its unique strategy and the computing power required to gauge the mood of the internet mob. With a turnover rate exceeding 230% in its most recent fiscal year, BUZZ is clearly an active trader seeking to stay on top of shifting sentiment tides. Of course, an ETF based on social sentiment comes with unique risks. Online chatter is notoriously fickle, and popularity doesn't always equate to profitability. Plus, social media can sometimes be vulnerable to manipulation. BUZZ's index methodology does attempt to screen out potentially deceptive posts, but there's no guarantee it can outsmart online charlatans. Whether BUZZ is a savvy way to harness the wisdom of the crowd or a precarious bet on the whims of the masses is a judgment call. The fund's performance has been a roller coaster ride, soaring over 54% in 2023, but plunging nearly 48% in 2022. Risk-tolerant investors seeking a highly active strategy may find it intriguing, but the faint of heart may prefer more grounded approaches. The intel I'm sharing today comes straight from BUZZ's public filings, including its prospectus, annual report, and website disclosures. Of course, we don't endorse any fund or guarantee the accuracy of its reporting. As always, do your own digging, think about your personal situation, and chat with an investment professional before making any moves with your money. This has been Spooky for Shrouded Securities. You've heard this 1,000 times before, but if you found this briefing beneficial, please smash that like button and subscribe to our channel. Wishing you smart, spooky investing. Thanks for tuning in.